I'm looking at a lot as like the post-dot-com recession, right? That was one where it was a
Okay.
major impact for markets and a smaller impact for the economy. But obviously, it's going to depend on how policymakers handle that. One thing I think is that a lot of people they fight the last war, right? So they look back, for example, at the 2008 recession, and now they start to fear that every recession is going to be like one of those. One big difference that I point out about this setup compared to that setup is that going into 2008, banks were the weakest they've ever been in terms of they had the smallest allocation they ever had as a percentage of their assets to risk-free assets like treasuries or bank reserves. And they had maximum exposure to loans, to riskier securities, and they had very loose lending standards, which means a pretty small rate of default could render them insolvent. Whereas now, because they're much more highly allocated to those safer assets, it takes a bigger problem to cause them to be outright insolvent.